Hey there, YouTube. Hope you all had a fantastic Christmas and are looking forward to the new year. I know I am. It's going to be a great year. And with the new year comes my busy season and tax time. And so today's video is going to cover how your refund is calculated generally, and will hopefully give you some insight when you do have your taxes done. If you didn't get as big of a refund as you thought you would, or maybe you got a bigger one than you thought you would, or maybe you owe. Hopefully this will give you some insight as to how it was calculated, why it was, or just how it was calculated, yeah. As to how it was calculated. The topics I'm going to cover are how the actual tax brackets work for the U.S., and all of the states have the same bracket system to my knowledge. Your taxable income and what standard deduction is, with not too much of a deep dive into that. Standard deduction versus itemizing is going to be its own video eventually, because that's a pretty involved process with limitations and all kind of other stuff. So won't get into that today. And then the last thing is going to be a brief touch on adjusted gross income, because all of these, and that's, again, that'll be a deeper dive into its own video later. But these are all things that go into determining if you owe taxes or if you get a refund, and how much that is. So let's get right into it. The very first thing we're going to cover is the actual tax brackets. And these are the actual 2023 tax brackets, federal tax brackets for federal income tax. So I have prepared an example with the relevant documents or example documents to explain it all to you. And really what it boils down to is two things when determining whether you owe taxes or if you get a refund, and the amount of those two numbers. The two things are your tax liability and how much you've paid in so far. How much you've paid in can be found in box 2 of your W-2. If you have a W-2, if you just have a job. If you are self-employed, then you should probably be paying quarterly estimates or even monthly estimates. That all depends. That's not the purpose of this video. That is a much more in-depth look at things. So this example is just going to be a single individual. That's the other thing. These are the tax brackets for single filers. These numbers, not the percentages. These numbers are for single filers. If you are filing single, if you are filing head of household or married filing joint, these numbers are going to be different. These numbers stay the same. These thresholds will change. So keep that in mind. This example setup is for a single individual with no kids, no other credits. Also, only one source of income will be a job that he receives a W-2. So let's go ahead, get into that. Got off track. So you have your tax liability is whatever it is, and then compare that to what you've paid in so far through whatever means. If you have paid in more than what your tax liability is, then you get a refund for the difference. If you have not put in enough to equal the tax liability, then you owe whatever's left. Okay. And we're going to walk through this example. Okay. So we have Mr. John Smith. Okay. Mr. John Smith has a job, and we need to figure out, before we can do anything, what Mr. Smith's adjusted gross income is. Now, for this example, just to keep things simple, he has a job of just $50,000 a year. He's salaried. That's what he makes. He doesn't have any interest income. He doesn't get any dividends. He doesn't have stocks, bonds, any other capital gains and losses. No self-employment, no side business, no rental properties, or any of the other things that go into adjusted gross income. Just know that really the total formula for feeding into your taxable, to determining your taxable income, comes from multiple sources. But most people are gonna just have a W 2. They're just gonna have a job. Okay, so for this example, I only mention these just so everybody knows it's not just your W 2 wages that goes towards calculating your adjusted gross income. But in this example, that's all there's going to be, just to keep it simple. So, Mr. Smith has a job. Like I said, he gets paid $50K a year. What does that mean for the tax brackets? Okay. Well, first we have to take away all of his deductions, which comes off of adjusted gross income. And some people say, oh, well, my medical bills that I paid, or a deduction, because maybe that can be a video all by itself, whether or not you can use medical expenses, qualified medical expenses, as a deduction. But there's something called standard deduction, which is what everybody gets. Almost everybody gets. An overwhelming near entirety of everyone gets at least standard deduction, which is a way you can think about it is the first collection, the first amount of money that is in a way tax free, income tax free, I should say. So whether or not you have standard deduction or itemized deduction is going to be its own video, because that really gets into the weeds. But that will be a video eventually. So just about everybody gets standard deduction. That comes off of your adjusted gross income, which is, for Mr. Smith, the $50,000. So his taxable income is what's left. It is the $50,000 minus the standard deduction. So his taxable income, if all he has, like I said, is just W-2 wages, nothing else, no other adjustments to income, that's it. No other sources of income, he'll get standard deduction. Also, this number changes based on your filing status as well. Do need to mention that. This is, for 2023, the standard deduction for single filers. If you are head of household, married filing joint, this number will be different, but the process is all the same regardless. It's just that the numbers in themselves will change. The process will not. So, we have established John Smith has a job, $50K a year. He gets standard deduction, $13,850. His taxable income is $36,150. This is what he will pay income tax on. Now, how do we calculate the amount of his tax liability? So we haven't even looked at what he's paid in yet. First, we need to establish what is owed, what is the tax liability. Okay, and here we have a very, very common misconception that I had before I went to school for this. Everybody hears it, growing up or even as adults in the workplace. You may not want to work too much overtime because you'll end up in a higher tax bracket and end up owing money come tax time. Everybody's heard that. It doesn't work like, while it is true that the more money you make, the more you will pay in taxes, it doesn't work in the way people are led to believe. So we have these thresholds. This is the lower end, this is the upper end of each threshold. Another way that you can conceptualize this is to not call them brackets, but buckets, and try to visualize if you have a row of buckets. In this case, you would have, 6 buckets, and we're not going to worry about this one. But let's just say you have 6 buckets, okay? The first bucket only holds so much, and then the overflow goes into the next bucket. Okay, so this first bucket, we have our $36,150 of taxable income. The first 11,000 would be taxed at 10%, not this entire amount. Okay, this first bit. So we have so far $1,100 of tax liability for the first 11,000 of this 36,000. Okay, that's the 10% for the first bucket. Now, what is left? Okay, we've already taxed the first 11,000 of this. So there is still 25,150 left to be taxed. Okay, so then we have this 25,150 that's left. This is what's getting taxed at 12%. Okay, and you can check that times 0.12 is the 3,018. Okay, so the entire 36,000, not even, just so, and I hope this is starting to make sense to people. If you make $50,000 a year, well, you would look at this and you think, oh, well, I fall within the range of the 22% bracket or the 22% bucket. Okay, but that is not how it works. You are paid $50,000 a year. You get your standard deduction or itemized if you do that, and it reduces your adjusted gross income to your taxable income. And then that's broken up even further. So even though 36,000 lands in the 12% bracket, you don't pay 12% on the entire 36,150, because if you did, this is what it would be. Okay, if you paid 12% on this entire amount, it would be $4,338. But it's actually, if you add these two numbers together, you can see it's only $4,118. It's a $120 difference. Now, that's not a $220 difference. I can math. So you would look at this and it's not a substantial difference, but there is a difference. And the further into this that you go, the bigger the difference makes, especially as you get further into this 22% and if you start reaching the even higher brackets. So now we have established in this situation, in this hypothetical, assuming there's no penalties, there's no anything else, no interest or penalties associated with Mr. Smith's return, he would owe, or his liability would be $4,118. Okay, now where do we go from here? Well, let's take a look at Mr. Smith's W-2, because we have to figure out how much he's paid in so far. Okay, so here we have Mr. Smith's W-2. So the $50,000 that gets put on the adjusted gross income calculation is right here, like it said, box 1 of the W-2. Okay, so now we're looking at box 2, federal income tax withheld so far. So this is money withheld from your paycheck every month, 2 weeks, whatever it is. This is the amount for the entire year that your employer withholds and pays to the federal government on your behalf. Okay, so in this example, hypothetically, let's say it's $2,000. Okay, so John Smith, W-2, box 2, $2,000. Let's also say, just because it's part of the calculation, if John Smith had any credits, it would directly reduce the tax liability. So if he had $100 credit for whatever reason, then the tax liability would be 4,018 instead of 4,118. It would be a direct reduction. So just because I'm sure somebody in the comments is going to say, well, where do credits play into it? That's where it plays into it. I'm not going to get into all the different kinds of credits because no. And we're moving on. So we have the tax liability. What he's paid in so far is the $2,000. So that means what's left is $2,118. So in this scenario, John Smith has his income, he gets standard deduction, taxable income $36,150. We've calculated what the tax liability is. He's paid in $2,000 of that already, but still owes the remaining $2,118. Okay. Now, this is not a great situation for Mr. Smith. What could he have done differently? What could he do differently for the future? Well, let's go back and look at the W-2 again, because I want to touch on a couple things here. Okay. Some of you may be looking at Social Security tax, Medicare tax. Why are there three numbers all the same? Okay. Generally, they will just all be the same. They will be different if you have some pre-tax benefits through your employer. One reason would be if you contribute to 401k, 403b, whatever. You have pre-tax benefits taken out of your check. In this example, he doesn't, just again for the sake of simplicity. So if your W-2, when that does get issued, which, just so everyone is aware, the requirement is that your W-2s are at least made available to you by January 31st. So if your company has their payroll outsourced to ADP or Paychex or some other payroll company, you might not receive a physical W-2 if one is made available to you through the app or through an online portal, through whatever company does your payroll. Okay. So just to be aware of that. If you get yours and these numbers are not all the same, that doesn't mean something wrong. It just means that you have some pre-tax benefits. So this number, your federal income tax and state, just so I just included a state just so everybody knows, like, you will have your state information down here. Okay. And your state income tax, like I said, it's going to be calculated the same format wise. It's just that each state that has income tax has its own brackets, its own percentages for those brackets. The function is the same, even though the numbers are all different. Okay. So this number, you have control over this number. A lot of people don't know. If you end up, come tax time, you file your return, you're like Mr. Smith and you owe $2,000. Well, that sucks. How can you avoid that in the future? You have control over this number. You have control over how much comes out of your check every month. And the way you do that is with your W-4. So you have control over this. Most people, so Mr. John Smith would fill out all the information on the top. He would check single. John Smith he doesn't have any kids. If you have kids, you multiply the number of qualifying children under age 17 by $2,000. So if John Smith had 2 kids, he would write $4,000 here. Okay. And then no other dependents, you would then write the $4,000 here. Okay. If that applied to you. And you're not going to get in trouble if you fill this out incorrectly on accident. If you just make an error, you're not going to get in trouble for that. So John Smith would just have zeros right here. Okay. He would have 0, 0, 0 because he doesn't have any kids. And then he could come here and say, I want an extra $176 withheld every month from my check. If he got paid monthly, pay attention that this does say for each pay period. So if he got paid once a month, he would need an extra, well, really, fifth. I think you have to use whole dollars. I'm not entirely sure on that, to be honest. I don't think it matters. You get the point. Not important. So that's W-4. There is each state that has income tax will have their own version of this. So again, the same process is applied. Now, looking at these two numbers right here, you may think, "Oh, well, what does this have to do with tax time, my tax filings?" Nothing. Unfortunately, nothing for most people. I say for most people because very high earners will have an upper limit of Social Security tax that they pay. And then even higher earners, and I'm talking like well into six figures. I think actually Biden just raised the cap for 23. 22, this was capped, I believe, 147,000 or maybe 146,000. So anything higher than that, you would not pay any extra Social Security tax because this is a fixed amount. This is a fixed percentage. You cannot control it. Social Security tax will always be. I don't know why that was happening. Social Security tax will always be 6.2% of Social Security wages. Medicare tax will always be 1.45% of Medicare wages. Both of these you cannot control. They are fixed percentages. That's just how it is. So for 23, I believe it was bumped up to 156,000 is the maximum wage that can be taxed for Social Security. And Medicare, you will pay, that doesn't have a cap. You will actually start paying extra Medicare tax if you are, I don't even remember, somewhere well over 200,000. But that's for very, very high earners. You don't have any control over that. It sucks. It's just the way it is. So if Mr. John Smith were to redo a W-4 for the next year, and assuming, even though it won't, the standard deduction has been going up every year. The IRS last year adjusted these for inflation. So these brackets went up last year. But the process is all the same for now. Let's say John Smith redoes his W-4 and to have an extra $3,000 withheld during the year, so that this becomes $5,000 withheld. Okay, now that's less money that you take home from every paycheck, but it's kind of a now versus later type of thing. Some people they're all excited about getting a $5,000 return. Well, I mean, if I had a $5,000 refund, excuse me, if I had a $5,000 refund, that means I gave the government a $5,000 interest-free loan. That's $5,000 I could have had in my pocket throughout the year. Personally, I would rather just have it. So I don't want to just give the government my money. So I changed this if Mr. Smith would have withheld instead $5,000 during the year. That doesn't change his tax liability because that's all based on income. If he had withheld $5,000 during the year, his refund would be, in this scenario, $882. That would be his federal refund. And again, states are the function, the process is still all the same. Each state does adjust a gross income a little differently. So I'm not, which is why, just because they are all different, literally all different. So I'm not, you need to look. You would have to look into your own state, speak to a professional in your local area in your state, um, if you wanted. But the process is all the same as far as getting adjusted gross income, plugging it into the buckets, tax liability, how much you paid in so far, do you owe or do you get a refund? That's why it's called a refund, because you're getting back the money you gave too much money to the government. That's why it's a refund. Something else I do want to point out: if you are a server or you are in any kind of job where you receive tips that are handled through payroll, you will have your W 2 will look a bit different because the tips that you receive through credit card transactions, and it because it runs through, uh, it'll run through your employer that way. If that applies to you, you will have a number in box 7, um, which will adjust all of this. So I'm not going to break that down into more hypotheticals. Just be aware that it may look a bit different if you are in an industry where you receive tips as regular as a regular thing. If you receive commissions, bonus checks, or just bonuses like that, it should all be included. Like it should all be included in these numbers here. Okay, it is all still wages paid to you by your employer. Okay, um, if you are somebody that receives 1099s for contract, if you're a contractor or something to that effect, that's going to be in the Schedule C video that I do eventually, because that does all play into the calculation for adjusted gross income, but it's a much more involved process. You'd be considered self-employed at that point, which is a whole other thing and is beyond the scope of this video. Hopefully you learned something. Hopefully I didn't use too much jargon, and if I used it, hopefully I explained it well. If you learned something, like the video, comment below what other topics you would like me to cover. If you have a question about this one that is very general in nature, put it in the comments. If you enjoy paying taxes, hit the dislike button. So, hope you all have a fantastic new year, and I'll see you in the next one.